If we get a recession, I think a decoupling could happen because we have a strong hodler base. There's a lot of millennials in Bitcoin. It's a generation that is mainly thinking about savings, about pensions. The other generations are still a little too young, and boomers are just a little too old. They don't get it. But interestingly, so all the cycle peaks so far have been like more or less at the same spot and also at similar valuations levels above that surface. And the same for the bottoms, right? The bottoms, they all happen here around that same period of time historically. Bitcoin is about optimism, and where gold is more about like fear and chaos.
This podcast is entertainment, not financial tax or legal advice. Views expressed represent statements of the speaker in their individual capacity, do not represent the views of Unchained, and should not be considered investment advice. Speakers often have personal, family, or business connections to Unchained, which may include direct financial benefits. Please see our disclosure at unchained.com/podcast.
Hey everyone, welcome back to the Bitcoin Frontier podcast. This week I have on Rational Root. Root, welcome back.
Thank you so much for having me, Joe. It's really great to be back. I've been following your content. You've been putting out great videos, so good.
Awesome. Yeah, I really appreciate that. It's fantastic to hear. It's been a while, I guess, since we last spoke. I'm definitely excited to get your update on where you think we're at in the current Bitcoin cycle. But how have you been? How have you been doing?
Yeah, really good. There's a lot happening in the world, so it's mainly macro. Like fundamentally, Bitcoin is doing amazing, right? Like we have all these super cool developments. No longer a hostile administration in SBR, which we're only a month into. And we have technical developments are amazing in Bitcoin as well. Things like eCash, Arc, Lightning, and the interoperability between all of them are really improving a lot. And so to me, like fundamentally Bitcoin, also on the regulatory front, everything looks like amazing. We have institutional adoption measurably, it's here. We're at the very beginnings, but we have, countries are interested, they're buying it. And so it's, we're only a month into the strategic Bitcoin reserve again, but the fantastic developments, except for price, obviously, which, currently you have a bit of a pump, but it's, maybe a bit disappointing for some, at this stage, although I've been relatively conservative until now. And I think there's good reasons why prices are acting like this. Of course, currently it has everything to do with macro. There's so much turmoil in the world. And so it's no surprise that Bitcoin suffers as well. It's a volatile asset. And so there's a lot of de-risking happening, which we can see by the gold price. And so, I'm, again, exciting about Bitcoin. All the fundamentals look amazing for the long term. But indeed, the current macro setting is very chaotic. And, nobody really knows what to expect and what's going to come. So, that makes it difficult, and people are de-risking.
Yeah, absolutely. Yeah. And I know you have a bunch of different charts to share with us if you want to go ahead and start pulling some of those up. But yeah, I think last time we spoke was probably before the Bitcoin conference of last year, if I remember correctly. And yeah, we got now we have a Bitcoin strategic reserve that has actually occurred since then. And, by the time we spoke last time, we may have been like, there's no way that that's going to happen within the next, 24 months. And it did. But you're right. Like price has been maybe disappointing for some. So I'm excited to get into some of these charts and see where, your analysis might show what might happen over the next 12, 24 months. So yeah, I know like one of the major topics, like you discussed, is macro, and we're also in a trade war right now with China, the United States versus China to some extent. What are your thoughts on that in particular?
Yeah, it's kind of difficult to know what Trump's real intentions are. There's all this communication about like Main Street before Wall Street, right? And so, but I'm still not convinced. Is that only narrative, or is it like real intentions? Because if he's going to put high tariffs that will be a bit devastating for stocks because like less foreign capital will flow into in the U.S. stock market, and so I think that will have a bit of an impact, like and perhaps also on Bitcoin since it's correlated still to stocks, right? And so on the other hand, like perhaps things will just good trade deals will come out of this trade war, and we will just keep on going as the fiat system has always been, going on, and the underlying problem of the dollar being the world reserve currency might just continue as it always has been, and perhaps Wall Street will win anyway. I don't know, like it's hard to read what Trump's intentions are, and to be honest, I don't trust. So not a single president, right? Like, so it's not what they say, it's what they do. And so, yes, it has put on tariffs and it has already caused like the stock market crash until now. Powell hasn't cut rates. And so there has not really been relief yet in the stock market. Although Bitcoin seems to be slightly, pumping. And so that is cool. That is exciting because to me, of course, those are like one-off, one day off events where in general, Bitcoin is still obviously correlated to the S&P. But, if Michael Saylor comes in and puts $500 million into Bitcoin, price moves up 2,500 or something, and so that changes that day. If stocks go down, but suddenly Bitcoin goes up, you get this, negative correlation for that particular day, right? And so, and of course, it's not only strategy. It's all there's more. There's Alexander Lizet in Europe. I think together with Adam Back, they're also copying this the strategy playbook. You have MetaPlanet in Japan, and of course there's institutional adoption. I mean, there's pension funds are allocating to Bitcoin. And so there's going to be a lot of passive flows, and we're all at the beginning of that. But to me, that this starts to look like the transition phase, where I think more and more often we could see like these 1 day off events where we have this suddenly negative correlation with the S&P, and so that might like gradually start to increase, and then you can get like a real decoupling at some point. So to me, it's very exciting that we're in that transition phase, right? That is again like a new phase, which is really starting. We're at the really beginning of that, and to me, that is really cool.
Yeah, I completely agree. Like decoupling has become kind of a funny word over the last maybe few weeks or so, where it's like people are like, don't say it out loud, or one day the S&P 500 goes down and Bitcoin goes down as well. And then, like you said, the next day, Bitcoin actually goes up and the S&P 500 goes down. So it's been very interesting to watch. What is this, maybe this first chart that you have pulled up here?
So
explain it.
Of course, with the traditional financial system, we don't have access to on-chain data, but so we can only compare by technical analysis and by correlations. But here we're looking at the Bitcoin versus the S&P, the 40-day correlation, and we can see that's fairly correlated. Like it's there's a lot of areas in the green, and actually some of those outliers, like where we get like this negative correlations, are actually due to industry specific events, like the FTX collapse or the SEC issues or ETF approval. So you can get like this negative correlation for a bit, but then it's really like an industry specific event that is causing that. So overall, since the 2020s, we've moved like quite like mainly in the green areas, except for some of those specific events, and so it's obvious that Bitcoin is seen as a risk asset by the world in general, and so it's very correlated to stocks, and so a one-off day event like we had, for example, Bitcoin moving up, stocks down, of course that doesn't mean like suddenly that we're decorrelating or or decoupling. you can only measure correlation over like a period of time, obviously. So here we're looking at a 40-day correlation. You can look at a 90-day correlation. You can zoom out a bit, zoom in a bit. But in general, so what I tried to do here was I took a 40-day correlation, and I also want to look at gold in that way. And so we can actually track a bit of that decoupling if it would happen, right? Because, Bitcoin, digital gold, although I think there's a clear difference between Bitcoin and gold, and we can get into that. But we can, it's clear from this picture that Bitcoin is very correlated to equities. And so, it's also not going to be a decoupling from one day on the other. Like, I think that's going to take a long time. But as I said, like those one-off days events that are happening, the more and more they happen, the gradually we can start decoupling. And so to me, it's still really exciting. Now, if we look at the RSI, for example, we can see a bit of that. Like, so here Bitcoin starts to move up while the S&P RSI still is moving down. And so that is exciting, like that is a good sign. And it might have to do to strategy, putting $500 million into Bitcoin and like some of those passive flows moving into Bitcoin, which caused this. But nonetheless, that is happening. And I mean, for all I know, we could start moving back down again in next month. This is, of course, it's a 12-monthly RSI, so it's a very zoomed out picture. Also, we're not at the end of the month yet, so this can still change. So if the stock market still would bottom or rally towards the end of the month, it could end up higher as well. So it's still not final, but this is the current indication which we have there. Now, if we look at gold, so we look at the same picture, Bitcoin versus gold, the 40-day correlation, we see it's like more or less all over the place, right? Where like we have days, of course, that were correlated, days that were not correlated. And so here there's no clear, correlation. We're more or less 50-50 in the negative or positive territory. And so to me, indeed, Bitcoin is still not acting as digital gold. And, currently gold is, of course, pumping very hard. It has been rising a lot. And of course, that is due to the macro uncertainty. But the difference, I think, mainly between Bitcoin and gold is that, gold is very fear driven, right? Fear and chaos. And there's currently like lots of fear and chaos in the world. Like what's going to happen with tariffs? It's the whole trade war. So obviously there's a lot of de-risking happening, and most people are not ready to put that into a speculative asset, supposedly than Bitcoin, right? So in my view, also Bitcoin is more liquidity driven and like more about optimism. So it's more built on optimism, and it's not really fear driven, right? So I think that's an important distinction between Bitcoin, even though it's seen as digital gold. But Bitcoin is about optimism, and where gold is more about like fear and chaos. And so it's not surprising that gold currently is rallying and Bitcoin is kind of, just hanging out there still in the unknown zone. I think it has to do with the pause. So we are in this trade war pause. And so the markets are also a bit in a holding pattern. Nobody's really knowing what to expect next. And so it wouldn't be surprising if price kind of just keeps hovering in the range. I don't expect any new all-time highs soon, but I also don't expect like to make a bottom very soon or so. But we'll get a bit of a price action later on.
Yeah, for sure. And yeah, you make a pretty interesting point about the correlation between Bitcoin and the S&P 500 and then Bitcoin and gold, because like I agree, like if you objectively look at gold and you objectively look at Bitcoin, ignoring their price and how they've traded in the past, you would think that they're very similar. Like they both have similar monetary properties. They're both bearer assets that you can hold without counterparty risk. And they're very similar in that respect. However, they're correlated. They're not correlated like you're pointing out right here at all. Or sometimes they're very positively correlated and sometimes they're very negatively correlated. So that is interesting. I wonder, like, do you think we'll reach a point where Bitcoin trades more like gold, or is it, like you said, Bitcoin is more of an optimistic bet. It's still very early.
So
Maybe it won't trade like gold anytime soon.
previously, I always thought, indeed, like Bitcoin is going to at some point act like digital gold, like gold, like the analog gold. But and credit to Nick Batia from the Bitcoin Layer. He actually talked about Bitcoin more as liquidity driven, and so I've been like I've been thinking about this as well, and to me it makes sense, because as I said, gold is more about chaos and fear. Like, if there's a lot of uncertainty in the world, people, go to gold. But if everything is relatively well, they'll put their money in more volatile assets. And so, of course, Bitcoin's volatility is still not really helping. I mean, Bitcoin is still seen as risky due to its volatility. And so it's, maybe if we grow to the size of gold, it could start acting more like it. But I always think it's going to be a little different because, to me, the biggest difference is optimism versus fear. So I don't expect it to ever trade the same, like it's just, so yeah, that's how I think about that. But so if we look at Bitcoin versus gold in the RSI, again, we see now that we're like both starting to move up. And yeah, is that it could also be more of it's coincidence. I don't want to say, but gold has been rallying, since the bottom of the previous bear market. We can actually see it in the chart. And Bitcoin has so too. We have been in a bull market with with some heavy or corrections, like some more sideways price action. We've moved up, sideways price action, moved up, sideways price action, or consolidation. But the RSI here, like for the last years, looks fairly similar. But yeah, I don't know. Like to me, gold has been rising due to the increased uncertainty in the world, and Bitcoin. On the other front was more like about optimism. Indeed, we can change the world with Bitcoin, right? There's heavy gains to be made in Bitcoin. We had a bottom in 2022, which was clear. We moved into a bull market, so many people were speculating, of course, on the price. And so I think there are different reasons why they went up, right?
Do you think that we're approaching a blow off top here for gold potentially? Like, is this peak fear, or could it get worse?
Yeah, it's very hard to tell. And again, I think it depends very much on the outcome of the trade war, right? Like, are we going to have a deglobalization? Like, is that going to continue? High tariffs and, countries turning to themselves? Or are we going to get good trade deals out of this? And, once the uncertainty settles, I think, gold might peak as well. And of course, gold has risen a lot. And so it wouldn't be surprising that we get like a temporary drawdown in gold. But I still think gold could go potentially higher depending on the outcome of the trade war. So it's we're with so much macro unknowns that it's really hard to tell where we're moving. The fact that gold is moving up and so much fear is also reason why I think like a recession is likely, right? Like it's definitely in the cards. Bitcoin came forward out of the 2008 crisis, and it's been a long time, right? There's definitely a high chance that we'll move in a recession, and again, also I think it will depend a bit on the outcome of the trade war. It's we'll have to wait and see.
Yeah. I do have one more question on gold, and then I want to get into your next chart here. Do you view, like, you made a good point earlier about like how Bitcoin is still, a $1 to $2 trillion asset. Gold's now a 20-something trillion dollar asset, very different sizes. Do you view the wealth that's stored in gold as like latent demand for Bitcoin, or like lagging demand for Bitcoin, like it's eventually going to flow into Bitcoin? Or do you look at it from a different perspective?
Yeah, so I think the fact that gold is rising so much, all that capital could potentially flow into Bitcoin because, of course, Bitcoin is better. It's gold 2.0. But of course, the world doesn't know this. We are, very up to date with all the fundamental developments of Bitcoin. We believe in it. So it's also on us as hodlers to in a way, it's even exciting if we get a recession or so to see, because it's on us, the believers of this new monetary system, which is really improvement. We can actually create an honest monetary system for society, which is for the kids, as Greg Foss would say, or it's such an important goal that to me it's really exciting, and so so in a way, if we get a recession, I think a decoupling could happen because we have a strong hodler base, and so
Parker Lewis and Drew Bansal are two of the deepest thinkers in Bitcoin, and while they come from very different backgrounds, they've landed on the exact same conclusion. It's Bitcoin that matters, not crypto. They recently presented a 77-minute masterclass on why Bitcoin is the true innovation, why money trends to one, and why other crypto projects are building on a foundation of sand. Watch the premiere at unchained.com/frontier. That's unchained.com/frontier. And now back to the show.
So I think because the world is not, doesn't yet understand the fundamentals of Bitcoin, a lot of that, gold has a 1,000-year history. And so it makes sense that once there's fear and chaos in the world, that it will flow into gold rather than a speculative asset like Bitcoin, which is seen by most, right? And so I think there is institutional adoption, and we're getting to that point where we got these small allocations to Bitcoin, but they're small percentages of a portfolio. People, de-risking also means people are avoiding volatility, and so it makes sense that capital still flows into gold, which has just traditionally been the hedge, right? And Bitcoin is not functioning as a hedge yet as well. So so I understand that capital is not flowing yet into Bitcoin, but I think it will at some future point. So the fact that gold is rising so high indeed shows how much capital potentially can flow into Bitcoin.
Mm-hmm. I want to get into your next chart on looking at the past recessions.
Yeah, so this is even a further zoomed out version, which I think is very interesting because we've been in the 4-year cycle with Bitcoin, but also equities have been in the 4-year cycle, as we can see here with the S&P. But before that, we had longer cycles. We actually had the .com bubble, we had the Great Recession, and between those lows, for example, was an 8-year period. And so we've since Bitcoin's inception, which came forward out of the Great Recession, the whole macro market started moving in the 4-year period, more or less. And so potentially, if we would get a recession, like if the trade war outcome is kind of disastrous for the world, we could potentially move into a recession where stocks would crash to these levels, and that could cause a change in the cycle dynamic, right? We could get an extended cycle. It can take longer to recover, and we could move into an 8-year period or so instead of a 4-year period for the next cycle. And so of course, we have the spiral chart, and we'll soon get into that because Bitcoin has obviously been moving in this exact 4-year pattern, and it could continue as well for the next year. We're more or less at a critical point in the cycle where we can either still flip bullish or bearish. And so I'm looking at some of those signals, which are the first indicators for where we could potentially move. And of course, again, as I said, the trade war outcome has potentially a big influence because it makes a big difference if we get a recession or not. So if the stocks would move to the levels that we've seen in the .com bubble or a Great Recession, it will probably have a big impact on Bitcoin as well. Even though we could that could mean also that a decoupling will come for Bitcoin, which it could be a very exciting period, as I said. But it could also temporarily drag Bitcoin down longer, and we could move out of that 4-year cycle pattern. And so that is something to observe, right? Through charts like the spiral chart.
Yeah. I kind of want to dive a little bit deeper into that in particular. If the S&P, or if the United States does go into a recession, and the S&P 500 RSI, relative strength index does drag down pretty significantly, and U.S. equities stocks get hit pretty hard. How do you decide whether you think Bitcoin will quote unquote decouple, or whether Bitcoin will just remain highly correlated with the S&P 500? Like, do you have like a weight that you put on both potential outcomes? Is it 50-50, or how are you thinking about it currently?
Yeah, I think Bitcoin has such a strong hodler base with like deep conviction, me included. So I wouldn't sell in a recession because it has nothing to do with Bitcoin, right? It's fundamentally, as we talked about in the beginning, like all developments around Bitcoin are extremely bullish. It's the macro turmoil that's causing like current bit trouble for price. But I think there is this hodler base which has deep conviction and so a lot more than equities. Therefore, I think if stocks were to crash to such low levels, Bitcoin could bottom early. And we actually see, like here, for example, the COVID crash, stocks also dropped like deeper than Bitcoin did. And to me, that shows like, okay, Bitcoin has a strong base, right? It of course, there's fear in the market, and Bitcoin is also susceptible to fear. But there is this long-term holders that won't sell no matter what, and that believe in the long-term potential. And so I think that's the reason why we could decouple early.
Yeah, it makes sense. I guess looking at this historical RSI charts, like Bitcoin and the S&P 500 are actually very similar, except I guess during the major parabolic bull markets, Bitcoin just gets really oversold for a decent amount of time, and that's why Bitcoin has potentially, extreme historical outperformance.
Yeah. But that was also, of course, in the early days of Bitcoin, we had like a low market cap, that was more easily impacted with new capital. And so we could rise to those extremely high levels, which, with the growth of the market cap has been more difficult. And, the reason for diminishing returns, basically.
Mm-hmm. Yeah, let's check out your next chart.
Yeah, so if we look at the psychology of that 4-year cycle that we've been moving in, and this is a spiral chart, it's based on the Wall Street cheat sheet, but then specifically to Bitcoin. So it's the hodler cheat sheet, where we look at the psychology of the market cycle and the feelings appearing as the market fluctuates. So we're basically looking at what is typical sentiment in the phase of the cycle that we're in, and we're currently in the intermission, which ironically coincides exactly with the Trump trade pause. So a typical feeling for this phase of the cycle is the top might be in. And I've been guilty of that feeling as well. I'm a human, and so we all get we're all emotional beings, and that's why Bitcoin works in this 4-year cycle. Why we get these bull markets around the tops have been aligned, the bottoms have been aligned. But just to really explain the chart real quick for newcomers, there's always probably some newcomers. So we started in 2009, the beginning of Bitcoin here. And we move like a full rotation in the circle, and we get to 2013. So that's the first cycle, and we keep on moving. We get to 2017. We keep on moving. We get to the 2021 bull market, and we keep on moving. And we're now in the 2025 phase in the new cycle. It's just a 4-year period, one full rotation, and price moves on a logarithmic scale. So it's times 10. So each ring in the spiral. We move out times 10. And so we're currently hovering around that 100K ring, which, one could say since the ETFs, more or less, we've been like approaching that ring. And in a way, very similar to the 10K ring that we've had, for a long time, like all this in the previous cycle, we have been hovering around that 10K area for a long time. And so I also expect some resistance at that 100K area because it's just a psychological level again. And so to me, it's not that strange that it might take a little time. That's why I've been relatively conservative in the estimates, because I think there's a lot of millennials in Bitcoin. And, we've been talking about like 2 cycles about that 100K price. And, I'm sure some of them eventually would want a house or a car or travel or do something with their Bitcoin, right? Like Peter McCormick is a typical example for me, which I think is amazing, starting his soccer club and but he also had to take some profits to make that all happen. Of course, he has a big impact now in the world. And so I think, a lot of millennials are in Bitcoin because they are it's a generation that is mainly thinking about savings, about pensions. The other generations are still a little too young, and boomers are just a little too old. They don't get it. And so, it wouldn't be surprising to me that therefore we have some resistance around these price levels for a little longer. And some of that money will, of course, flow into institutions. And institutions are measurably in Bitcoin. So I have the ETF tracker and also a whole page dedicated on institutional adoption. So I'm actually extracting all of the SEC data and looking at how much is flowing into ETFs and so forth. And so we can actually see a clear pattern of rising institutional interest. And so that's extremely bullish to me. So I said, again, the fundamentals for Bitcoin are really strong. But institutions are having yet very small portfolio allocations. And so they're dipping their toes. It's not like they're not going to go all in. So my reasoning has also been, institutions will probably need a cycle. They're a bit less, it's not like retail where they're just moving on hype as fast. Institutions move a little more slow. They'll make a small allocation. They will wait some time. They will have to see some gains. Then they might get comfortable with like a higher allocation. And so therefore, for me, it's also not surprising that, we're not at 200K yet or so. Maybe it will take a full cycle. ETFs have been approved only recently. Like we're a year in now. And, we could have potentially been in faster if it wasn't for like a bit of the hostile administrations, like Biden administration or so, which had more this hostile view against Bitcoin. And so, so I think since now that gateway is open and capital can actually start flowing into Bitcoin, we need to give institutions a full cycle as well, to get comfortable with Bitcoin.
Mm-hmm. Looking at this chart, like you pointed out, there's no guarantee that the 4-year cycle will forever repeat. But if it does happen again for this cycle, I guess the euphoria phase would align with the end of 2025. Is that correct?
Yeah, so exactly. The euphoria phase would be at the end of 2025, the end of this year. And so we still have, 8 months to go, more or less, to recover. And we're at this critical zone, and we'll get into price action in a bit where we can see that more closely. But indeed, these lines have been, they're nearly touching, but there's, if you zoom in, they're still not touching. But this is again showing the diminishing returns in Bitcoin. Eventually, also due to catalysts. I mean, we have a trade war that coincides with like the previous bull market. If you look at, for example, here the early cycles, 2013. This is the 2013 cycle. Here, this is even pretty close, and that's early on in Bitcoin, so it's not that surprising to me that, especially with catalysts, intervening with one another. For example, here we had the COVID crash and the ETF bump. Imagine they would have been opposite from each other, then maybe the cycle would have, crossed here already. So it's not very surprising. To me, it's not surprising that the lines are starting moving closer to each other. It's an increase in market cap, diminishing returns are happening. And it's also, I think, there's several factors. I mean, one is also an abundant amount of supply. So we're in this kind of transition phase where, we had there was limited supply in the beginning, but we're currently already at 19.8 million or so Bitcoin in circulation. And so the inflation rate has become very low, but we are, if you look at the active supply, so that is basically all of the circulating supply, so the 19.8 million minus the liquid supply, so supply from lost coins, but also strong hodler base. If you subtract that, so basically the supply that's left over, the available supply, is the supply that has an impact on price, that's more susceptible to price action. And so if we look at that supply, we're currently we're actually at high levels. Like it's more or less an all-time high. It's kind of moving down. So to me, that means like we're like slowly transitioning from like an high inflation era, but low amounts of supply in the beginning, to now like, slowly digital scarcity maturing. And so that would be a counterforce to the diminishing return. So if Bitcoin would behave in the future exactly in the 4-year cycle, which, is maybe unlikely due to possible recession and as we just explained, but then we could start perhaps even expanding more again, so to me, it's not like diminishing return doesn't have to continue. It will always be a force, and it's currently the dominant force, and we can see that because the lines are close to each other. But digital scarcity could at some point take over as the dominant force. I don't expect that to happen soon, but yeah, if we get like the game theory with countries competing for the most amount of Bitcoin and institutions as well, it can also happen fast, slowly then suddenly. So that is the way I look at that.
Yeah, I completely agree. You make a great point. It's like there's reason to, think diminishing returns is valid. Obviously, as the market cap gets larger, it's harder to get even larger and larger. But it's still, in my view, like in the grand scheme of, total global wealth and how large Bitcoin is, I just feel like, it has a lot higher to go.
Mm-hmm. Yeah, so since we're talking about the Bitcoin cycle, let's go into the 3D version of the spiral chart. So this gets a little more complex, and it looks maybe a little messy, but it's the same thing as we just saw. So it's the 4-year cycle. So we start in 2009, we move, and then we make like a cycle every 4 years, and we're currently here in the top. So 2025 is that the top right quadrant. And here's the cycle peaks. And so what is interesting here is I used on-chain data to actually have over and under valuation of Bitcoin. And so we can actually observe that cyclical behaving even better, right? So we can see like the bull markets is all in the green area above the surface. And the surface area is actually always the fair price for Bitcoin, so we can either move below or we can move above, like highly extend above, and the surface area is more or less the fair price for Bitcoin. And so yeah, currently we just bounced off that surface level. Yeah, we are here, but if you compare it to the previous cycles around that same time, we have done that in past cycles as well. It's a bit difficult to see, but here's 2017. We've bounced off the surface or close to the surface. We did that with the China mining ban. We bounced off the surface here during that like bull phase, and so that's why I said we're still at this, a bit of the critical point in the cycle where we could see a continuation. We still have the rest of the year basically to get like more green dots here to continue above that surface, but we could, also start potentially moving below it and that to me would be like definitely a sign like, okay, something is off with the 4-year cycle, right? Like that would be an indication like, okay, the recession is likely here, or, the 4-year cycle pattern is changing. But interestingly, so all the cycle peaks so far have been like more or less at the same spot and also at similar valuations levels above that surface. And the same for the bottoms, right? The bottoms, they all happen here around that same period of time historically. And then there's some outliers, for example, like here, this is the COVID crash, like there's we went far below the surface, but that was a clear, we can point like a clear catalyst to that event. The same for the ETF. This was actually ETF approval. So those blue dots are the halvings. The blue dots here are the halvings. And so we had an all-time high before the halving, right? This dark green dot is an all-time high before the halving here. That was due to the ETF approval. And so, but now we're in that bullish zone still. And so to me, it looks still like, yeah, there's a high probability that we could see a continuation based on the 4-year pattern that we've always been in. it's not really yet a reason to really start worrying. But yeah, of course, the macro circumstances don't look good, and that could like perhaps Bitcoin to shift and move below the surface. We will have to see. But so far, we've been positively bouncing off that surface. So to me, that looks quite bullish.
Yeah, I love this 3D map. This is really interesting. That surface level that you're referring to, how is that being determined exactly?
Yeah, let's get into the next chart because it's okay. Maybe a bit more easier to understand. And this chart, by the way, is live available on my platform, so people can always go to it.
And how do they get to your platform again?
It's bitcoinstrategyplatform.com.
Awesome.
Let me share the next chart, which is the same valuation method, because it's basically that those valuations levels were basically based on the on-chain value map. So this is actually the same valuation levels. So the surface of the spiral would be that green line in the middle. That would be fair price, which is currently around 75K, and we've bounced off it, as you can see, like here. And we did also after the ETF consolidation, we bounced off that fair price above that surface level. And so how is this value map calculated? Basically, what I did is it's based on some of the best on-chain top indicators and bottom indicators that I could come up with. And so the bottom indicators is more based on to get technical, it's based on coin days destroyed. But coin days destroyed means basically like a coin builds up time. Like if someone buys Bitcoin, it starts building up days. And as soon as you sell the Bitcoin, those days get destroyed. And so a high amount of coin days destroyed mean that supply is getting more active. And so the bottom indicators is basically based on that kind of behavior. And it has, I've put this chart out before we made the bottom also in 2022. And so it exactly nailed the bottom. And it has done also with the tops are very good. And the top is very interesting. The top is actually based on capital inflow and on available supply. So it's on Bitcoin's scarcity. And so basically when that supply gets saturated with capital, like that means like we get to highly overvalued levels. And currently that is at 172K. And so the reason why, again, also I don't think it doesn't look like we have had a cycle peak. Like we could peak due to macro circumstances. Just, if the world is moving into a recession, perhaps this was it, the 4-year cycle might change and we might never get to those heavy overvalued levels. But it's also still a fair chance. And currently, we're still bouncing off that fair value level. So it's also still likely that we might reach that highly overvalued level towards the end of the year. There's still that likelihood. So, and that is what is illustrated. And so the levels in between, so basically the fair price is the average of the two, and then it's kind of like Fibonacci levels where we move like to levels, probable levels that have like a high interaction with price, where you can see, for example, in 2017, we go to overvalued to fair price, overvalued, fair price. Then we start to moving to heavy overvalued and to overvalued, and and then eventually we peak. And so those levels, to me make a lot of sense. And I use them as well in the 3D spiral chart because they illustrate very well the cyclical behavior.
Mm-hmm. And I guess, obviously, over time, generally speaking, all of these metrics are slowly drifting higher, and they seem to, I guess, drift higher when the price moves higher.
Yeah, exactly. Yeah. So the bottom indicator never moves lower, which is kind of interesting. The top does because it's based on available supply, which sometimes shrinks, also in capital inflow, which can of course move higher, lower, and so you get a bit of this expansion and contraction. But the bottom indicator is just moves higher. We're currently at 33K. So in the worst case scenario, if tomorrow the world would end, we might drop to 33K. But it's more, even if we get a recession, like let's say we get a recession and Bitcoin stays correlated to stocks, by the time that market will make a drawdown, like this level will already have moved up into the 40s or 50s or so. So to me, that is like basically the worst outcome that could happen. It's gonna likely tomorrow. We're not gonna drop tomorrow to 33K, right? Like, so this is gonna like keep rising, and so I think, and interestingly, realized price, which is also very a common on-chain indicator, it's the average purchase price of all Bitcoin. What we've seen in bear markets is that typically, like, the bear market bottom is when price falls below realized price for a short amount of time. So I don't have real price here in the chart, but basically these bear market bottoms, they were just below realized price. Realized price would hover like around here or so, and here as well. I think this whole zone was like slightly below realized price, and realized price is currently at 44K, I believe, and it's also rising still. So, by the time we get a recession, even realized price might be at 50K or so. And so, yeah, we could potentially move to 44K or so in like the most worst case scenario where stocks will, or where Bitcoin will remain correlated to stocks and we get a recession, then I see that possibility. But on the other hand, it's also likely that we'll decouple from stocks and that we might see a more positive outcome. So to me, it's actually also reasonable to assume that Bitcoin might stay above 75K in the next period.
Yeah, I tend to agree, and I think like comparing Bitcoin's performance to the S&P 500, like a couple weeks ago or whatnot, I think we were at least close to the worst 3-day performance in the S&P 500 since like 1987. And still Bitcoin has held up, like you've been pointing out, relatively well. And that kind of gives me, hope that, okay, like Bitcoin's performing extremely well despite traditional markets getting hammered pretty hard on a historical basis.
I think volatility has also been relatively low to the downside. Lowest actually it's ever been, and I would say the reason for that is like passive flows into Bitcoin. So we got all these micro strategy purchases, and but also pension funds and institutional interest. And it's just like gradual, demand for Bitcoin, but that limits downward volatility as well. And so therefore I think it's quite likely if we move into recession that Bitcoin might decouple and we bottom early, and then we could get like a real narrative of like, hey, Bitcoin is the hedge, against chaos as well. And so that would be very interesting, actually, an experiment, but it's maybe not as fun because it would mean that Bitcoin price will still drop lower for the near term. But in the long term, it would maybe be incredibly bullish for Bitcoin.
Agreed. Let's check out your next chart.
Yeah, so let's get a bit more into price action, and so we'll price is more, short-term holders are always more susceptible to price, and so therefore we look at like short-term holder indicators. Like the short-term holder cost basis is the average purchase price of people that have been a short amount of time in the market. And that has always been acted as kind of like if we spend time above the short-term holder cost base, it's usually like bullish territory, and then if we drop below and reject off, we're in this bear market zone. For example, here in 2022, where we had this whole cascade of events of crypto issues, which we had like a major cleans of the market, which in a way was very healthy for the new recovery. And I think we have less of that now, right? Like we don't have, we have, in a way, like to me, it's also like unlikely that we will get such a bear market, except if Bitcoin would stay correlated to stocks and we get a recession, we could see such a thing. Or if something like my strategy would get margin called, or but it's very unlikely because they have 0% interest rates, and it's so unlikely. Their margin calls is so low that it looks a lot healthier than the whole crypto cascades events that we had here in the 2022 bear market. But then to get to like the current correction. So those corrections, I've been pointing this out in my newsletters. They are very similar in terms of overvaluation and undervaluation. And so For example, if we look at the 2021 bull market, we in terms of standard deviations, we were 4 standard deviations of the short-term holder cost basis, which is that green straight line here. And currently, we only reached like 1.4 with the ETF bump, and 1.4 with the election of Trump, and we've also considering this would be the bottom, and here we like slightly moved below that line here that I drew here, and that was due to like the trade war catalyst. There was extreme fear in the market, stock market crashing. Everyone was talking about the trade war, and we just mildly, dropped below that, and we've been since recovering. So to me, it looks very likely that this is the bottom, that this is the temporary bottom for Bitcoin, and we could start a recovery process like similar to the ETF overvaluation that we have and undervaluation. And another thing to point out here is, so we've had like, of course, the previous all-time high is like a major support zone. So if things, if we would start rejecting off that short-term holder cost basis and move into more bearish territory, like to me, the 60, 70K range, there's going to be a lot of support there, in my opinion. And potentially we might not drop below that. If we do, we could, in that worst outcome that I've said before, like, the 40K range, like the 44K where realized price is at, is an option, but that would be like indeed, like recession continues and all those things. Now, the 100K zone, does seem like a resistance levels, like just as we had with 10K, I think 100K is also a resistance zone for some of the reasons that I pointed out earlier. But these overvaluations and the consolidation that we have seen since are very similar. We even had like similar, like an ETF approval catalyst and like a disappointing halving, and the election catalyst and a disappointing inauguration. And so it's like, it looks very similar to me. And so if we zoom in a bit more to just that, like let's zoom into just those 2 corrections. So we look at just the standard deviations that we get into this. So this is the ETF pump and the election pump that we've had, and the correction. And so we see like the current bottom is at 138 days from that peak, where here it took 154 days. To me, it looks to me close enough considering we had such a major like fear, amount of fear in the market here. And so, if we more or less say that we have a similar amount of time, and it's just an estimate, but it took 68 days to recover above that short-term holder cost basis, then we're talking about like mid-June, to like really get above the short-term holder cost basis. But we're currently actually like almost testing it, right? Like, so we had the pump today towards 90K, and so we're but it's likely that we might find some resistance at that short-term holder cost basis, because of course, when price gets to that levels, some of the short-term holders, like they are actually break even, and they might decide to sell, or step out of the market due to de-risking or fears, and therefore, it takes a little longer to go above that. So I don't expect that we maybe immediately like go above that short-term holder cost basis. We can see a rejection, and then towards June perhaps start moving back above.
Makes sense. And the current short-term holder cost basis is about 92.5 thousand.
Exactly. Yeah, it's currently at 92.5, which we're like approaching. So it will be interesting to see. It will certainly be some resistance. I expect some resistance there. So we'll see how it plays out. But I wouldn't be surprised if we reject off it on the first try. It makes sense. And then we might maybe like here it took. We had this first bottom. We like hung out at the short. We dropped back. We tried another one. We rejected. We had another one. We like hovered around, and then we broke. So it can take some time.
Makes sense.
Yeah. Then a bit like less optimistic indicator, and also again for like the more conservative outlook, is like the short-term holder supply, which is like a proxy for hype, in my opinion. So the amount of supply that belongs to these short-term holders has been dropping. So that is, and this is not a trend that easily turns around, right? Like it could. We've done it here, but in the previous bull market, for example, we just had one pump and then a drop. Here we already had 2. And so the fact is, like, once hype is gone, it takes time to to get back into like a hype. And so it could happen, but this is definitely a chart like to track moving forward. I would like to see that turn around towards the end of the year, because if we keep on just dropping, that would be like a bearish signal. So this is an important chart to track, I think, towards the end of this year. And then to maybe finish with like the critical point that we currently find ourselves at. We've talked about like the 3D spiral. We showed the surface, which we're still above that surface, and if we stay above, that's all good. So this is another way to look at it. So I'm looking at some Bitcoin key levels. So we have the red dotted line, that is the 200-day moving average. Then we have the black line, which is the 21 weekly moving average. And then we have the short-term holder cost basis, which is more based on on-chain data. And so we have these three indicators here, and we see that like they converge at some point, which is usually like, where these arrows are at, that it becomes like an inflection point a bit, where, either we continue, we break out, or we break down, right? We move down. And so, for example, here in the bear market, we rejected off it. And so what's interesting here, if the 200-day starts moving, like if we start converging, and especially if the 200-day starts moving above the other two, I would really like Bitcoin to break out, because if we start rejecting, that would signal like bearish price action ahead. And so and we're nearing those levels. We're currently in trying to break through that short model cost basis. As I said, like the first try maybe will not, we might still reject off it, but it, those levels will start converging just as we did here. And I would like over the next couple of weeks to see Bitcoin break out there. But so that is definitely an interesting indicator to track, in my opinion.
Absolutely. I'm curious to see what you think about this. Some people have suggested that Bitcoin will never see like another 80% drawdown. You brought up, Tal, like even if we go into a recession, maybe the max downside might be $50,000, $40,000 Bitcoin, which still wouldn't be an 80% drawdown. Do you think that if, the 4-year cycle continues, and if Bitcoin, rallies pretty hard throughout the rest of 2025, and maybe we avoid a recession, do you think then we might see an 80% drawdown, or how do you think about that going forward?
Yeah, so actually that is maybe, let's pull up this chart still. So in my opinion, the higher the overvaluation, the higher the correction, like the heavier the correction. And so, if we have only mild overvaluations, I also don't expect like extremely heavy corrections. So in a way, the higher we rally, like if we would go to 200K, I also think then again, it makes sense to get like an 80% drawdown or a bear market, but then also from 200K level, that will, get us back to a different, like a higher price, of course. So currently, I don't expect an 80% drawdown from these levels because we haven't seen the heavy overvaluation. And so I think it has to do with the cost basis that people enter the market, right? So if they're at an extreme loss, there's just more fear and they'll capitulate. But, if the loss is bearable, then, I also expect the correction to be less severe. And so that's how I look at it. And then again, if we look at the average purchase price of Bitcoin, the realized price, which is at 44K. So let's imagine that, indeed, over the next year, we'll get a recession and Bitcoin still correlated to stocks, or, strategy will get margin call, like worst case scenario, right? Like then, historically, Bitcoin only just mildly dropped below that average purchase price of Bitcoin, which, the realized price. And so that would still mean those 40K, 50K levels. Therefore, I don't think at this point we'll see an 80% drawdown. But if we get to heavy overvalue levels, which I showed in the value map, we might,
Yeah, I agree. And I think like some people, will go back and look at Bitcoin's bear markets, mainly like people outside of Bitcoin. They'll be like, wow, like, Bitcoin's failing or it's extremely volatile. And it's like, in my mind is, I think maybe similar to you, it's like the bear market's really mainly occurred because Bitcoin performed so well in the bull market. It got
Exactly.
way too
We cannot
high
go
to
up in
begin
a straight line, right? Like, so the higher the overvaluation, the more quickly we go up, and we got to unreasonable high levels of price in the short. And we can see it with gold now. Like, gold is actually
Yep.
rallying extremely hard, and so it will be due for a correction at some point, which is just a natural market dynamics. So yeah, I'm very still optimistic about Bitcoin, especially the fundamental developments. They are amazing to me. The technological front, like Arc, eCash, the interoperability with all those things, it's really amazing to see. Like and also. The strategic. We're in the strategic Bitcoin reserve, so that the game theory is playing out. And so, what I've been advocating for is also that people need to have patience, because there's measurable institutional adoption, and you can go to the Bitcoin Strategy Platform /ETFs, bitcoinstrategyplatform.com/ETF, and there is an institution page where we can actually track institutional adoption. And that data the data is only updated until Q4 2024. So now by May, data will start coming out for Q1 2025, which I think is going to be less optimistic than Q4, due to the consolidation we've been in. And also due to the macroeconomic circumstances. So I even expect some de-risking there from some institutions. But we'll also perhaps see some new headlines, like new institutions that start, coming into the space. And so I think the trend overall will still be up from institutional adoption. And so to me, that is extremely bullish. And yeah, I think we need to give institutions a full cycle. So I've been therefore relatively conservative, but the fundamentals look amazing. And, the macro uncertainty will pass at some point. And so, my advice would be patience, and, it will be rewarded.
I completely agree. Patience is definitely required in Bitcoin. Well, Root, thanks so much for taking the time to do this. Your charts are always incredible. Where can the people go learn more about you, and then also your website that you mentioned?
Yeah, so you can find me on Nostr, so at The Rational Root. You can find me at Twitter as at The Rational Root. And my platform, which is the bitcoinstrategyplatform.com. And you can sign up there for my weekly newsletters, where I'll inform you about all these things. And you can keep track with the charts, live charts on the platform as well. So I kind of guide people through all of this chaos.
I love it. Yes, everyone definitely needs to go subscribe to Root's newsletters. They're great.
Thank you so much, Joe, for having me. It's always been a pleasure, and keep up with the good videos you put out. Like, I nearly watch all of them, and they're always very to the point. And so, great work there.
Awesome. Really appreciate that, Root. And thanks everybody for watching.